Good morning, everyone. Let me first say that I'm delighted to be here today, and thank you to the organizers for inviting me. Before going into the particular topic that I was asked to discuss, the financing growth in challenging times, let me take a moment to say a few things about SISEC and the Securities and Exchange Commission. So we are the regulator for the capital markets and securities markets in Cyprus. We are a member of ESMA, which is the European Securities Markets Authority, and we are also a member of IOSCO, which is the World Organization for Regulators for Securities Markets and Capital Markets. Our mandate, like any securities and capital markets regulator, is first to protect the investors, but also to help in order to have a healthy growth of the market in Cyprus and in Europe. Within SISEC, we have more than 800 entities that we regulate. We regulate a number of investment firms, which are governed under the MiFID rules, around 250 investment firms. We have a market for funds, alternative investment funds mainly, but also UCITS funds. More than 300 organizations, either fund managers or different types of funds that are licensed and operating through Cyprus. We have a sector for administrative service providers. We have the capital markets, the Cyprus Stock Exchange, and we also have a small sector, a growing sector, which perhaps can discuss later, about crypto asset service providers. So this is what we regulate in Cyprus. Now let me go to the particular topic of which I was asked to discuss, about how do you finance growth in challenging times. So in challenging times, indeed, growth is the antidote to austerity, but growth needs to be financed. And in order for the growth spiral to be triggered and the process of financing for growth to take place, can take place through financial intermediaries. So given the challenges by the traditional, I would say, financial institutions, primarily the banks, we need to ascertain whether other financial intermediaries, and in particular alternative investment funds or UCITS funds, or the investment funds in general, or crowdfunding platforms, have the potential to fulfill this role. So as a regulator, I would like to point out a few things about legislative developments within the European Union regarding regulation of investment funds and regarding the regulation of crowdfunding platforms, and how those developments have been said to create alternative tools for the financing of growth through these structures. Investment funds can be used to support infrastructure projects necessary to stimulate growth, whereas crowdfunding platforms have a role to play in the financing of business startups, new companies, and also of SMEs, small and medium-sized enterprises, which typically lack the asset backing or the predictable revenue returns which are sought by the traditional investment funds. So in Europe, we have a new legislative proposal is the European Long-Term Investment Fund, and these product rules are tailored, as the name suggests, to the financing of long-term projects in relation to real assets. LTIFs are available to retail investors, which implies that high investor protection standards are embedded in the LTIFs. And in addition to their role in supporting traditional infrastructure investment, LTIFs are also well suited for the financing of the green transition, the movement to the sustainable economy, and also the digital transition. So LTIF is one legislative and regulatory initiative in Europe to support the growth, especially in relation to real assets. And then obviously, we have the alternative investment funds and the UCITS funds. Just to explain, the alternative investment funds are funds across the European Union which invest in alternative investments. So we have private equity funds, we have real estate funds, within the structures of alternative investment funds. And we also have the UCITS funds, which the UCITS funds are investing more in traditional asset classes such as stocks and bonds. Within the new changes in the proposals within the alternative investment funds, there is the proposal for the loan origination of investment funds. So basically loan originating AIFs, which are taking place under the context of the IFMD review. Loan originating funds allow the loans to be granted to the businesses on an offshore off-bank balance sheet basis while complying with the IFMD investor protection and systemic risk oversight standards. And loan originating funds are aimed at professional investors and assume investment risk instead of the credit risk which is assumed by bank depositors. Also, another legislative proposal under the IFMD provision is to allow the appointment of the AIF depositary. The depositary is the one who's holding basically the assets of the fund in a member state other than the member state where the fund in question is established. And following the IFMD review, depositaries which primarily provide asset protection can be appointed in established EU fund jurisdictions while allowing the creation of the fund in a more cost-effective EU jurisdiction. This way, additional EU jurisdictions will enter the map of financial services, which is both a means for financing growth through the investment funds, but also an end by itself as the overall financial services sector will grow. And lastly, just to say something about crowdfunding. The crowdfunding provides, as I said earlier, alternative investment financing opportunities to SMEs and startups, helping thus finance the real economy. The rules on crowdfunding were up until recently fragmented and unharmonized at the EU level, which in effect created challenges for entities seeking finance within the region. The EU regulation on European crowdfunding service providers for business, which entered into effect in 2021, lays down uniform rules across the EU for the provision of investment-based and loan-based crowdfunding services. It also enables EU crowdfunding service providers to offer their services in the EU with a single authorization, whilst abiding by the strict contact and transparency rules of the EU crowdfunding regulation, ensuring investor protection. So crowdfunding now provides access to a larger pool of investors across the European Union through an EU-authorized crowdfunding service provider, enhancing thus opportunities for growth to be financed, whilst investors are protected under strict and proportionate EU rules. And finally, just a comment about the market in Cyprus. The market in Cyprus for funds, which would finance the growth in the economy. Mainly, we have alternative investment funds. So basically, we have 10 billion of assets under management at the moment. Out of those 10 billion of assets, the majority of those assets are in alternative investment funds. So as I said earlier, private equity funds, real estate funds, and so on. And another important point to mention is that 2.5 billion, so 25% of the assets under management, are actually investments in Cyprus, are investments in corporations and in projects in the island. So that's why we believe that the fund sector can be indeed the alternative form of financing for the economy to grow.